The market finishing the day largely flat, just the Nasdaq taking a little bit up, the rest taking a little bit down. And after a 6-day heavy win streak, I think this is the least we could get. We needed this to, calm down at some point. All good parties come to an end. It's certainly been a good party. And this party has been extending for a very long time. And believe it or not, I expect the party to continue. But is it going to be as vigorous as I once thought at one point last week? No. There's been a macroeconomic change that did not take effect that I originally expected, and many had originally expected to take effect, and that was an increase to the minimum wage. I believe that this was going to be the last factor in inflation. Typically, we need upward wage pressure to see inflation. That was going to be coming in the next stimulus package, but it looks like now it's just not going to. So I still expect inflation, but I don't expect it to be rather quick and aggressive. I think it's going to be a slower inflation. But that said, the rich have certainly gotten richer. And, that's just how the stimulus is going to occur. The rich happen to own a lot of stocks and like to put cash into assets. So as this next stimulus bill gets passed, I expect the rich to get richer once again, and for that cash to flow back into stocks and to continue the market rally higher. I still expect some inflation. I'm not taking inflation off the table. I'm just saying this huge, not huge, but large, catalytic stimulant to inflation, this upward wage pressure, is no longer on the cards. Now, will it be on the cards in a year or two? It's possible, but we're talking about, what's the outlook like today? That's uncertain. That's beyond the scope of this video. Right now, we're hitting a high level in the S&P, in the Nasdaq, across the whole market. And, it should continue. The environment is right for it to continue. I'm not expecting any sort of drawdown, but without this $15 minimum wage, I see, sudden inflation and shorter term inflation expectations to be tempered down a little bit. It's certainly happening. We're seeing it in commodities. Basically, every single asset class is doing well right now. If you look at WTI Crude, that's doing well. You can look at interesting commodities, things like corn, you will clearly see inflation. Obviously, the real estate sector has seen this in material prices the whole year, and obviously in real estate themselves, how home prices and all this. So I'm not saying inflation is not going to happen, but a huge part of what would add to inflation has been seemingly taken off the table. And the market's seen a big run. And I think in the long term, the run is going to continue. I don't think that's a surprise to anyone. But what I also don't think is a surprise to anyone, or would be a surprise to anyone, is if the market does some sort of selling here, if people decide to take a pause with their buying because we are at high levels, we're not going to have a $15 minimum wage, and for things to, kind of flatline a little bit, and for the rally, the speed and the slope of the rally to kind of just calm itself down just a little bit. I think that is something that can happen here. And I don't think it's a surprise to anyone. It certainly wouldn't be a surprise to me. That said, I'm not doing anything crazy. I'm not selling my positions. That said, I'm only having positions that are well priced, and are well priced without any of this inflation or this stimulus, that are well priced as is, that the market can go sideways, and I'm happy with these kinds of things. In addition, I'm also making sure I've got protection and hedges against a possible sell-off. I don't want to be underexposed to a possible downside, just more sellers than buyers. I think that's highly likely at any moment now. Will it happen? I don't know. We will see what happens. And until next time, peace out.